Hi everyone, and welcome to the PivotBoss Closing Report for March 8th, 2016. I am Frank Ochoa, aka PivotBoss, with your analysis after the recent session. What we see here in the ES, in the daily time frame, is that prices have continued to trend higher. Right? We've seen this week over week, this uptrending market. We've seen 1 and 2 day pullbacks along the way, and after the recent squeeze that we saw into 2007. We've seen a minor hold and then a little bit of a pullback here. We talked about before that a pullback could be seen into this weekly pivot range for a shot at seeing a continuation into the primary weekly target. We have yet to find the low of the week yet, but once we find that low, it could be a quick buying opportunity for another attempt higher. However, we have to see how low this comes. This previous month's high is going to be very important. That's this level right here. Once price pushed through that level, the retest at that area was bid. Now we're coming back into that area. Bulls want to keep 1968s defended for a shot at squeezing into the upside primary target, which is currently 2040. But should price reach 1968, you're likely going to see this come down to about 2032, 2030, somewhere in that zone. Now keep in mind, we may see a push even below 68s just a little bit, which could then force a short squeeze of any late shorts below the previous month's high, and that could fuel the move up. So right now, that's the primary idea, is to look for a pullback and continue to watch for signs of a defense off of the previous month's high for a shot at squeezing higher. Failure to hold that level will open up a return back toward the HVN below at 1921. Looking at the intraday time frame, what you notice here is that prices have been pretty much coiling at highs here. You're also seeing a bit of a rounded top type of pattern here where prices are kind of doing this action. And typically speaking, that could imply much more weakness ahead. Now again, we do have that 68 right here, but if prices can't hold that zone, you could see a much bigger push lower into that 1921, as I mentioned before. That's the previous month's high right here. The previous month's close would be 1929. So that would be the next key level to target should 1968s fail to be defended by bulls. So any failure to hold that zone obviously opens up a move into 1929. All right, if we take a look now at crude oil, here's crude oil in the daily time frame. This one right here was a very aggressive counter trend move here. We've seen a very solid short squeeze over the last few weeks, ever since we kind of bottomed out down here around 2870s. Prices opened and pushed beyond the previous session's high, and immediately the sell programs came in, and it was relentless. As a matter of fact, looking at the footprint throughout the session, it was evident that a lot of aggressive buyers were coming into the footprint, but price continued to push lower, which is indicative of OTF responsive selling, passive sellers using limits and just rolling those down, absorbing all that buy-side demand there. And what you saw was price come all the way back toward the previous session's low. And this is going to be important to see how this plays out. But overall, this big push up right here still implies that any pullback could be defended for a shot at seeing a move into the next HVN above. So we have basically the 3344s went bid. That's the composite VPOC. In going bid, the implication would be to at least create new value or establish new value at higher levels or retest previous value. And 3917 would be the next key level above to test on a value basis based off of how price traded in late December in that zone. So overall, we could see another push downward, perhaps down into 3513, but any retest of 35 could offer an opportunity to defend much higher and defend and push price much higher. Otherwise, failure to hold that level will open up a return back toward composite VPOC at 3344. So this has been significant how this thing has squeezed. Overall, any pullback after that initial squeeze could be a defense opportunity, but failure to hold basically above 3463 will be a big deal. That's the midpoint of the key range here. As I recalled before, if you're going to bounce off the bottom and return to the midpoint, the expectation would be a follow through into the top, and that would be 4050. So blowing through the midpoint of that range, and I mentioned this before, even getting all the way back into 3463 could still be a buying opportunity for a squeeze into 40.5. So we'll see how this plays out as the week progresses. In a lower time frame right now, you can see how significant that sell-off was throughout the session. Basically, you had a pre-market double top right here that led to a big time reversal. That pre-market double top was relentless afterwards, and the short squeeze was significant. And you can see price came right into the previous week's close and high, which was a target from our intraday trading room. So that was a very, very powerful magnet right there. You can see that price went bid off that zone, double topped, and then came right back to it after failing to see acceptance above the 50% weekly pivot boss pivot. So right now, this is going to be important. Failure to hold this level opens up a move back into 5-day VPOC at 34.59 and a retest of the previous month's high at 34.69. Holding 36s in general, there's a bit of a 5-day LVN there. Holding 36s could offer a retest of 37 with a shot at seeing 37.27 short term. All right, let's take a look at gold. Here's gold. This one right here has been significantly bullish. We've been bullish this entire time since the beginning of the year. The one short time that we were looking at a short-term reversal was here, and then once we got that move down, we were back to being bullish. So we've pretty much been in tune with the waves of this market here. And one thing I want to say about this is now we're coming into a point here where we could see some short-term selling pressure yet again. Right here we have the top of the key range at 1263.90. And you can see right above that level is 1272.40. This 1272.40 has been rejected 3 times here, and now prices are kind of just closing right on or around that 63.90 zone. This is going to be important because these rejections right here above this high could imply a return to composite VPOC, and that's going to be 1233.30. So we could be looking at a move of about 30 handles to the downside ahead if prices cannot reestablish or establish itself above 1272.40. So any retest of 1272.40 or perhaps the previous week's close, 1270, any retest of that zone could be a selling opportunity for a move into 1233.30. Given the existing uptrending market, any pullback likely to be defended for another shot at new highs. But short term, we could be looking at a 30-handle decline in the days ahead. Now taking a look at the NQ, this one's been a little sloppy compared to some of the others and has been a little bit sloppy here over the last few weeks in general. But ever since we got the failure to hold below the 38.93 half, the expectation was for a move back toward 42.26. We got it perfectly. Price came back into the midpoint of the current key range here and then blasted through the top. Attempted to hold above the top for several days and failed, and now we're seeing the top become resistance on this session, 43.09s. We've seen lower highs day over day, lower lows day over day, so we have a short-term downtrending market. I think the saving grace for bulls right now is going to be this minor LVN right here at 42.26, which is the midpoint of the August range. And if you come back to this zone, I would say that that offers an opportunity to buy and perhaps squeeze for that upside push into 4,400. Major HVN right there is 44.10, 44.11. That could be the next upside squeeze zone off of this 42.26. Failure to hold 42.26 will open up a path back toward 40.85s. On an intraday time frame, you can see right here that prices basically failed to hold above 43.11 half. That's been our key level for some time. Chopped and held around that level, then pushed downward, came back to it, defended, and now back to lows here. So again, we could see more weakness ahead into that 42.26 and even as low as the previous month's close, because failing to hold above the previous month's high here opens up a path to the previous month's close. So we could be looking at a move into 42.26 or as low as 42.04, but any continuation into that zone could be the last buy opportunity for a potential swing move up. Otherwise, failure to hold 4,200 opens up much more weakness ahead. Again, likely back into the next key levels below 41.74, 41.30, 40.90, etc. So right now, we got to continue to see how this price play around that 42.93. Failure to hold above 4,300 implies at least more weakness short term to the downside. So we'll see how this progresses as we head into the rest of the week. All right, that's it for now. Let's see how this thing plays out heading into Wednesday's trading. Good luck and trade well.